I'm Bill Gross with my colleague,
Patricia Castillo.
Patricia Castillo, and this is our Wednesday afternoon home buying seminar. We do it every Wednesday, 5 p.m. Pacific, 8 p.m. Eastern. We also live stream it on YouTube, Facebook, and other social media. We love to have it live. Love to have you guys come and ask questions and participate. It's meant to be participative. So if you're watching, either you come in on the Zoom, and if you're not there, it's how to get there. The registration's in the show notes. But come in live and ask questions, participate. Or if you're on the live stream as well, feel free to ask questions, or even if it's on social media afterwards, if you ask questions, we'll get to them. But we talk about all things on how to buy your next home, whether it be your first home or trade up. But Denise and I are both real estate salespeople. I'm a broker. She's a sales agent. We're both with eXp Realty here in California, part of a national company. But we talk about real estate all across the country. So there you go. We've launched. Patricia, where do we want to start today? How are those interest rates?
Yeah, I mean, they're definitely, fluctuating. And I thought it would be a good idea, since we have Gustavo on the call today, it would be a good idea to just introduce the cost factor. I know that we've gone over that, I think, earlier on in the process, but it would be a good idea to revisit the cost factor, considering that the rates have changed, and just looking at what a down payment would look like for a first-time home buyer, and also what the costs are that are involved. So there's costs for appraisal, inspections, escrow fees, title fees, and also some loan fees, maybe underwriting things, fees. So I thought it was a good idea to have Gustavo kind of go over that with us today and look at what can be expected for a savings, because when you decide to purchase a home, you do want to start by having some funds on reserve. And so I thought it was a good idea to go over that today and see what that looks like. So welcome to our call, Gustavo.
Yeah, thank you. Thank you again, Patricia, for having me, and Bill. And it's a good topic, because as I talk to borrowers, they think it's just a down payment. They're like, yeah, I got 3.5%, or I got 3%. And then I go into a little bit more about the other costs, what's associated with it. And that what gets them a little bit, maybe they sit back and they're like, well, okay, I may need a couple more months. So I think it's a good conversation to have. So, let's just put some numbers and easy math numbers, right? So that people can get an idea. So for example, if you've got a home purchase price, $500,000, right? We talk about what's going to be the initial cost. Well, you got that down payment. So if you do a conventional 3% down, you're looking at $15,000 down payment. A lot of people may think, great, I have that, I should be able to buy a house. But as Patricia just mentioned, there are some additional costs that go into that. You have your escrow fees, you have your title fees. So let's take escrow. That may be maybe around $3,500. Now that's something that myself as a loan officer, I don't control, right? So that's determined through escrow and the company and the services. And part of that could be also the negotiation, who's paying for what, the title fees as well. And then you have your home insurance, right? Where they're going to go ahead and prepay 1 year of home insurance. That could be another $1,200, depending on what kind of coverage they may want. And then you have some prepaid interest, right? So if your loan closes out on the 15th of the month, you got to finish out the other 15 days and pay that up front, right? So we prepay that. You also have your property taxes and insurance. So on your property taxes, we live in California, which is, high property taxes. So we usually estimate about 1.25 of the purchase price. That's what we start out with. Once we start working with escrow and title, we get the prelim on that. But let's say it's on a $500,000, let's say it's $500, right? So if we need to pay upfront 4 or 5 months, you're talking about another $2,000, $2,500 of the taxes that you're going to be paying. Also, you're putting that money into an escrow account along with your home insurance for the following year. So you prepay 1 year, and then you're going to drop in maybe 2-3 months into your escrow account. So that's starting to add up already, right? Patricia also mentioned the appraisal cost and maybe other inspections. That could be anywhere from $1,000 to $1,200. You have your appraisal costs, you have home inspections. So if we take that $500,000 home and we're adding up all these numbers, we're looking at around $25,000. You know, we're looking at on those additional costs for that borrower to have really $25,000 to cover the closing costs plus the down payment. Okay. Now, you may have some lenders out there as well that are going to be charging you points, right? You want to buy down the rate, you're going to pay a point on it. 1 point is $5,000 out of that 500,000. So it could very easily be $25,000 up to, you know, $30,000. So that's, I like to, you know, make sure that I go through all the numbers with each borrower so they understand the final numbers and what they can anticipate.
Mm-hmm. Yeah, it's very true. And sometimes when you have the home inspection, that could lead to another inspection. You might want to have a roof certification performed. You might want to have a sewer scope performed. And all of these inspections are, you know, maybe $200-$300, including the termite inspection. You might want to have that done as well. So yeah, that definitely starts adding up to the initial cost for the down payment.
Right. And I recently had a home in San Diego that needed a slab check, right? So they went through that process, and that was another inspection that they needed to take care of. So the borrower is investing a little bit of money in the beginning process, right? Because once you go through that process, you know, they're not going to get this money back if they don't proceed. If they find something wrong with it, you know, it's better to have lost a little than to get that home that's going to cost $40,000 in repairs, right? Or more.
Absolutely.
So there's always an investment on the borrower side. So they're gonna need to be aware of that. And I think, you know, on my side, it doesn't make any sense to hide any numbers. And just like on your side, Patricia, it doesn't. You know, you talk about those inspections. Yes, we got to do this. It's to protect them in the long run, you know?
Right. And part of our job as real estate agents is to prepare the client, you know, whether they're buying or selling. So in this case, we're talking about first-time home buyers. So that's what we disclose in the beginning is, okay, great, you're looking at buying a home. You know, this is going to be your down payment and estimated, you know, this is what you're looking at for each inspection.
Right.
I just had a buyer that was going through that due diligence period where they were going through all their inspections, and the total cost ended up being about $1,300. So that was the home inspection, termite, a sewer scope inspection. And, you know, so it does start to add up. I did have another client also last year that we were in escrow. She paid for the home inspection, and then we also wanted to have a sewer scope inspection done. So that was another about $250, $300. And then she determined, you know, this wasn't the right home for her. She wasn't really happy with the findings, so we canceled the escrow. But again, like you mentioned, that's money that's spent. So that might happen. You have to also prepare for that too. It might happen that you're in escrow, you go through the inspection process, you decide this isn't the right home for you for whatever the case may be, and then you end up canceling the escrow. So that's money that's not refundable.
Right. Right. But like I said, it's better to know now, you know, and some of these things, you know, they could be a negotiation point, right? But if it's something where it's big enough where you're like, hey, I'm not buying that house, I'm not moving into that. Like you said, it's just better to know now. And, you know, you spend $1,000, but it's money well spent.
Well, I do think it's important to have expectations in line with the market. You know, I've had I had occasions where, as a listing agent, a buyer's agent didn't prepare the buyer, and I think the buyer had the false assumption that the condition of the property should be like brand new, and they should be able to do an inspection. The property should be free of any defects noted. And you know, that sounds nice, but most of us live in homes every day with things that are broken or need repair or need maintenance. And you know, properties are usually sold as is for a reason. And so when we get those inspections, there's a difference between if it appears to be lower value as a result of the inspection, of course we should ask for concessions. But if that is common for what we walked in the door expecting, then to ask for inspections it just becomes a negotiation. Now, we should always negotiate the best we can, but just know that kind of what goes around comes around. So I think it's important. I try to tell buyers up front, look, you see in the house, if the inspection comes back with a list of defects that are similar to what you expected, that's what it is. If it's worse, we find something major, of course, we ask the seller, or the seller should have known about it. oftentimes you'll discover maintenance the seller did but didn't finish, or painting over, problems. That's different. But when we just discover a used house has things that need maintenance on, I remember when I sold the house once, the little springy things behind the back of the door, the buyer wanted all those replaced. I said, I lived here for 10 years. I don't think we broke them. They were like that when we got the house. So, if you want to buy the house, buy it. If you don't want to buy the house, don't buy it. And so it's all a little different, I guess.
Yes, that's true. And in this kind of market, you're probably not going to get that fixed.
I don't think you are. I just don't see that today. Even though the market is not as crazy as it was 6 months ago, I don't think you're going to get it as you're not going to get a seller to make a lot of minor changes but you never know. I mean, I had a buyer ask for concessions totaling 15% of the sales price. I said to the agent, that's a value add. That's a rehab project. That's not concessions. And it was a really old property. It was in terrible condition. I said, what did your buyer think he was buying? And I get those things were all defective. He has to replace asbestos, this or that. It was an old building. Of course, that's what was there. So we did negotiate, but he didn't get anywhere near the 50% he asked for.
And you mentioned renovation too. And as first-time home buyers, they may be getting a home that needs a little fixing up. So go through the costs. I like to make sure that they get all those costs and they know, and then say, hey, what kind of reserves you got as well, so that maybe you can do, the changes that you're talking about, right? The improvements that you're talking about, and be able to plan for that accordingly, right? So, because I think every first-time home buyer, they'll get that home. I remember when I got my home and I was like, hey, I want to make the following changes, and you think about it and you go through them. But when you get that quote as well, and they're telling you it's $4,000, $5,000, $7,000 to redo the kitchen or do these, then you want to make sure you also plan for that and you have something there to help you in those kinds of times.
Right.
Yeah.
Very good.
Also, having some reserves, I think, is important because you might have an emergency. You might have, something that comes up. Like, for example, when I bought my home here in Downey about 7 years ago, this was a probate listing. And, there wasn't a whole lot of information provided on the disclosure. So we went to the inspections. I knew the plumbing was old, had to get, replaced. And I thought, okay, I'm going to start, working up to that and getting it done. But literally the first week when we closed, the shower flooded and it was backed up. I had the home warranty, so that helped. But even with the home warranty, there's still a portion that as a buyer, you're still going to have to contribute. It's not going to cover 100%. You're still going to have to contribute something towards that, that repair, even if you are using your home warranty policy.
How about those interest rates, Gustavo?
Yeah, last week, of course, we've had a rise, right? We had a good stretch a couple of weeks ago where the rates were coming down slowly. And then, of course, as we got some numbers in Europe, and then we had, Powell talk about his speech at Jackson Hole. It was just kind of the market just took that and ran with it. We got to some some new highs in the last couple of months. It kind of stopped a little bit, but I'm definitely up about a quarter from where I was 2 weeks ago. So the good thing is that as a broker, I'm able to look around and see where can I get the best deal, right? So depending on the borrower situation, I just had one yesterday where they had a great credit score, 760, and we were able to get them right a little bit below 5%. So we're around 4.95. Not he doesn't have to pay any points or anything like that, but there's still scenarios where we can still get and hover around a 5%. Wow. And then of course FHA is lower than that as well. So government loans, VA loans.
This week's been a kind of a turnaround and back up again. So it's really been kind of a wild ride here for.
It has been. Yes, it has been. As we get these pre-approvals, which is why it's so important too for home buyers right now. You got pre-approved last week or 2 weeks ago or even a month ago. Make sure that loan originator is following up with you, because rates change daily, even multiple times a day, right? So if the rate keeps on going up, you may be out of that price range that you're looking for, or that comfort zone for your payment. So then if they don't communicate that to you, that could put you in a tough situation, because the next call is, oh yeah, you're not qualify for that loan amount anymore. It's $25,000 less, and that may be a surprise to you, of course, to your agent. So
Right.
definitely during this time, we want to have communication all the way across.
Definitely. And I think a lot of companies are really struggling. And so there are agents who I think are wrong, loan officers who are wrongly saying rates are locked in or quoting low rates because they're desperate to get business in. And when it comes time to lock in and deliver, they're not able to. So that's why it's so important to work with reliable companies like Gustavo, like the people that Patricia and I work with, so that we can deliver. It's one thing to quote a great rate, it's another thing to deliver a great rate. So that's what
Exactly. And that's right. And the pre-approvals that I have, I keep following up with them and I let them know, because like you said, it's about expectations. Even when you're going through the cost and you guys are working through buying that home, on the rate and as the daily move happens, it's about expectations. I can't just all of a sudden come back 5 days later and say, well, your rate's this much higher. It's the next day, hey, you know what, the market's acting up. I just wanted to let you know, this is where we're at, and I'll keep following up. I'll keep watching it. And that's if they don't want to lock it in, right? So I do have the option to lock it in without a property address. So, but if they decide they kind of want to write it out, then it's like, okay, then it's just a matter of managing the expectations with some communication, a quick text, a quick email to make sure that they're aware of it, so that they don't get that payment shock all of a sudden, me coming back, oh, it's 0.25% higher now, right?
Right. Exactly.
Yeah.
Exactly. So Jeffrey, our good friend Jeffrey from the credit repair
On-track
world.
credit.
What's going on? What do you see happening? What are buyers doing? What do you see happening in the market?
Well, it's great to be here. It's good to see you guys. You really, between yourself, Bill, and Patricia, you're always on point when it comes to California. We do business across the country. We're based out of Illinois and Chicago. So we do have an office outside of Phoenix, but at the same time, I get to hear about things on your end. Gustavo, everything you said, I started as a lender originally. So everything you were saying, I remember back then. And it's like, you said it best, rates change every day. And it's funny because we're helping a client who was saying, well, we were pre-approved for 400,000 and our monthly payment's only going to be about 1,200 is our principal and interest. And I said, okay, when was the last time you had your pre-approval updated? Well, it was in about the middle of 2001.
Yeah.
And I said, okay, well,
Nice try.
is your loan officer, did he bring it up? Well, we've been calling him. He hasn't got back to us.
There you go.
So those are the kind of things I remember. Those are what you had to do. You had to let people know what was going on, because when rates changed, when I was a loan officer, they were between 6 and 8. So this is like 12, 13 years ago. So I know what it was like, how you could lose that ability to buy something, or now your pre-approval is $25,000 less.
Right.
So all the things you said were pretty much what's going on. I see on our end, I see a lot of people though that can get a deal done. If they're really focused, they can put in an offer and they can find a way to get it done. We're only on the credit side, so the lender has to be an expert. The realtor has to be an expert, and everybody's got to do their job. And it really does work out in the end. But it's important that right now, with everything changing, it's really important that we all stay in our lanes and do our job to the best of our ability.
100%.
Right. There are other options too, like no state, what is it? No, I'm having difficulty. No stated income loans. But those require a much higher down payment. So if you're an independent contractor, you might be interested in that type of loan because maybe you don't have consistent deposits into your account every month. But those do require larger down payments. And what do the rates look like, Gustavo, for those types of loans? Like a no.
So that's definitely above a 7.5% up there. Like you said, those bank stated or P&L or those type of business owners, right?
Right.
They're going to require a little bit of more, like you said, bank account statements. They take a look at the deposits, what's being deposited in there. It's a lot more risk for the lender. They're non-qualified mortgages. So then because of that, the return on the rate has to be a little bit higher, right? So, right now I'm looking at those and they're about 7.5% for sure. And then of course, from there you have private lenders, investors that are looking after that. And then that could be, 8, 9, 10%.
I remember the days until about 3-4 years ago, private lenders were always 10%. Just as a matter of principle, they were never single digits. And private money, I remember, came down to 9, 8, and then 7%. And it was like they're giving money away. But like a lot of things, that's changed here in the last 6 months, I think.
Mm-hmm.
Cool. Well, Jeffrey, thank you for jumping in here. We brought you in just for some eye candy for the ladies. So thank you so much for
Yeah.
being here.
Yeah, okay. All right. Hold that thought.
But we interviewed Jeffrey previously on this, and if you're looking to buy a house, one of the things we recommend is get your credit checked, and if you can improve your score and get a better price, Jeffrey is part of a company that will help you improve your credit score dramatically and save hundreds, if not thousands, of dollars for just a modest amount of work and price. So, thank you, Jeffrey, for supporting us. Appreciate having you around.
Thank you very much.
Anybody else in the call, feel free. That we mean this to be participative. So if you have questions, feel free to jump in. If you're watching online right now, live, I can answer the questions. And if not, if after the call you have some questions, put it in the chat box, and either Patricia and I will get back to you to answer questions. But that's what we've done this for. We're in the business of helping people and answer questions, and that's part of the process. There's no question that's too simple, and it's not something we haven't heard before. But we're glad to help you learn. So feel free to participate with that. Gustavo, any last suggestions or comments for buyers looking to buy today? What would you recommend them to do to be successful in their process?
Yeah, I think definitely, shop around, right? You definitely want to talk to people because there's a lot of information out there. There's a lot of things that the media will cover, and then it will get, translated differently, right? So everybody wants to always get multiple quotes, do that. Working with a broker like myself, I'm able to shop and save them time that way. I'm able to look at 5, 10 different lenders and be able to do that. And even then, I still tell people, you know what? Go ahead and take a look at this. Go online. You can take a look at it, but make sure you're really comparing the costs. Are you getting points? Are there fees? Are there underwriting costs, processing costs, like you talked about? And then you can compare it correctly. And I break that down for them and I help them. So because it is, even by my second or third, mortgage, when I was buying, I was still, a little bit unfamiliar about the process. You buy the house once and you forget about it. And the next time you buy, you have to go through it. So it wasn't until I got into this industry that I was able to really understand it. So I put myself in those shoes, and I know that even, at the second or third time, it can be confusing. But I really tell people, shop around, feel comfortable with it, and ask a lot of questions. That was the key thing too that you mentioned. We answer maybe the same question, different, to different people. It's very important, and that's why people keep on asking it. So don't be afraid to ask those questions. We're more than happy to go through it and explain it and provide calculations so that they really understand it. It is such a big purchase decision. You want to make sure you understand it correctly.
And Gustavo, I appreciate that. And if somebody wanted to get in touch with you to maybe ask some questions about your programs, or if they qualify, what's the best way to get in touch with you?
Yeah, definitely. You guys can give me a call. My number is 714-334-4563. But also my broker shop is called Sendero Home Loans. So online, senderohomeloans.com. Pretty straightforward, and you'll be able to see me then. You guys can always text me, or you can also find me on Instagram and social media as well. There it is.
There you go. So call or text senderohomeloans.com.
Correct. Yeah.
And if you purchase or refinance, hit the right button and they'll take you there, or just give him a call or text and he can help you. So Gustavo, as always, thank you for supporting our call. We appreciate having you.
Thank you, Bill, for having me. Thank you, Patricia. I appreciate it. Thank you.
Absolutely.
Patricia, any last comments, questions, suggestions for our listeners today?
Yes, I wanted to welcome Sonia Thomas to the call. And I'm not sure if she has any questions. Do you have any questions for us, Sonia, before we wrap this up today?
I don't, but thank you. I appreciate all the insight. I'm a new agent here in the Metro Atlanta area. I'm with EXP as well. So I was just trying to get more insight from other people's experiences. And I appreciate the fact that we touched on the mortgage side. So thank you so much.
Okay, fantastic. Well, I just wanted to encourage anybody listening to, watching this live stream or on Facebook, We're here to provide, free information to you and help you plan out your roadmap. So that's why we have different partners join us on the call to facilitate that roadmap for you. So for example, we have Jeffrey Eigel. He's with On Track Credit Services
In Chicago.
A couple of our participants on this call have joined the program to improve their credit and their FICO score. So if that's something you're interested in, this is definitely a great place to do that. So any questions, feel free to reach out. I can be reached at 323-365-9909.
Fantastic. Patricia, always a pleasure. And I'm Bill Gross. We do this every Wednesday. It's our home buying seminar at 5 p.m. If you're in the LA area, next Thursday, a week from tomorrow, so that's going to be on the 8th, is the LA County Real Estate Investors Association meeting. It's free. If you think of buying property or investing, come see us. We're there. We're a vendor. I'm actually the official podcast event. There'll be about 250 people, 50 vendors. So it's in the Culver City area. You can get more information for it, LAREIC.com, LAREIC, Los Angeles Real Estate Investors Club.com. And it's free. Love to see you there if you're available. Otherwise, you do this next week. If you're watching on the live stream, feel free to ask questions. We'll get back to you. Patricia, always great to see you again today. I think it's 3 or 4 times today we talked.
Yes,
Great
we
to be-
did. People are going to start talking.
No, I'm a married man, Patricia. You're getting me in trouble. Okay, you're my business wife, I think, at this point. So anyhow,
That's right.
thank you so much, everybody. Have a great week. We'll see you guys next week.